Hello again, everybody. The title of our panel is Creating Competitive Economies, and I found myself asking the question, what exactly is a competitive economy? So I looked up the definition on the World Economic Forum page, and what they have said is competitiveness is the set of institutions, policies, and factors that determine the level of productivity of a country. And of course, a competitive economy is a productive one. A productive one generates growth. Higher growth leads to higher income levels and ultimately to better living standards. So we're going to talk about the pathway to get there on this panel today. Your Excellency, I'd like to start with you. Inflation in Turkey is running close to 70%, which in itself creates a whole bunch of obstacles in terms of creating this competitive economy. Yesterday on our central banking panel, I had the opportunity to speak to Dr. Fatih, the central bank governor, and he said to me that the central bank are going to do whatever it takes to get inflation back under control again. My question is whether the government is also going to do whatever it takes to bring inflation back in line. And this with the view of course, you did release several spending measures earlier this week. Some people in the market feel that the fiscal consolidation could have gone further.
Well, thank you. Yes, the government will do what it takes because our number one policy priority is attaining price stability. Unfortunately, we have high inflation, but now we have a credible, robust program to bring it down. Monetary policy course correction, which you have discussed yesterday, is largely done. Now it's our turn. Government's role here is first, we're going to tighten fiscal policy to support disinflation. Incomes policies are going to be more supportive, but the key is structural reforms. Through structural reforms, we hope to boost productivity and enhance competitiveness. Of course, it includes green transition, the usual twin transformation, but also, upskilling, reskilling, public finance reform, so across the board, labor market flexibility. So yes, central bank is doing a great job, and now, it's high time that we provide additional support, and that's why this week, we unveiled a package of fiscal discipline, fiscal cuts. We're going to reorient investments into more productive areas. That's key. But also we're going to cut certain spending to create more fiscal room. But also tightening fiscal stance is going to help disinflate. So it's a combination of all. To summarize, we have sound policies and a structural transformation narrative. And both combined, hopefully, will help regain investor confidence, have a big impact on portfolio preferences, and we're almost there.
Disinflation generally comes at the cost of growth, and President Erdogan has pursued a very pro-growth strategy policy. What level of tolerance do you think there would be for a hard landing or a recession?
In the long run, there are no trade-offs between growth and disinflation. In fact, disinflation or low inflation is absolutely essential for sustainable high growth. We know that. But in the short term, some trade-offs may emerge. I think those trade-offs are worth living by. So my sense is there will be tolerance to some moderation in domestic demand. So we're rebalancing growth. We're changing the composition of growth. What we are pursuing is sustainable high growth, not boom and bust episodes. And that's really where price stability comes in. It's absolutely at the core of this program, and we are committed, we'll deliver, because it's very difficult to operate in high inflationary environment. Very difficult to attract FDI inflows. So the path to competitiveness is through higher productivity, of course, but that requires sound policies, and price stability is the core of that.
Yeah. Thank you. Minister, I would like to turn to the Philippines. The GDP numbers came in last week showing that the economy grew 5.7% year on year. Last year, also very strong expansion, one of the strongest in the Southeast Asia region. Let me just ask you how you see the outlook for the rest of this year, and then also what other measures the government has been undertaking. We talk about structural reforms, we talk about infrastructure development, how all of that is going to contribute to the process as well.
Yeah, we're very happy about the performance of the economy from 5.6% last year to the first quarter this year of 5.7%, among the highest in Southeast Asia. And we're making sure that we have the policy environment that will sustain growth. We're continuing our Build Better More program. We have 185 flagship infrastructure projects, totaling cost of upwards of $160 billion US. And this is being pursued, supported by the launch of our Maharlika Investment Fund, our first sovereign wealth fund that will pool the money to support infrastructure, but also not government by itself all the time, mainly through partnerships with the private sector, through PPPs. And in that regard, we have recently passed the first public-private partnership code that has made clear and predictable policy environment for the private sector participants in our infrastructure projects. You know, the infrastructure projects are meant to improve the physical connectivity. You know, we're a series of many islands, you know, and physical connectivity is always a challenge, and we tend to have a higher logistics cost because of the multimodal way of transporting goods and people. But we're addressing that through projects like our Central Luzon, that's the main island, Luzon, the Central Luzon Economic Corridor. We will build railways to interconnect a port in somewhere in the north to Clark in the middle, down to Manila, and then down to Batangas. And that will improve within Luzon the connectivity, physical connectivity. Now, cyber connectivity is critical given the digital technology era we're in, and that's also going on very rapidly. Now, we're facilitating this by way of policy reforms that we are implementing, like, for example, the opening of several sectors to 100% foreign ownership, like in telecommunications, utilities, airports, tollways, etc. This policy environment will make it easier for foreign investors to decide to come in if they want full control of the project.
Yeah.
And there are new laws that are being done. We're revising a recovery law that was passed during the pandemic, and we're addressing some of the weaknesses of the lawmaking or clarifying certain provisions to avoid the weaknesses that we observe during the implementation of the law. Of course, our friend from Turkey talked about upskilling of our workers. That's what is happening full scale and with intensive support from the government.
Yeah.
But with the participation of private sector as well, not just Philippine private sector, but also our partners from abroad, providing upskilling programs for our workers.
Well, we're going to talk in a short while about some of the trade agreements also. You speak about your partnerships, so we'll get there. Before we do, I do want to speak to the minister as well. I was in Morocco 1 month after the horrific earthquake that struck for the IMF meetings. And you know, when you think of Morocco, the country has faced many challenges over the last year, be they commodities, climate-related, the earthquake, obviously. But Morocco has been quite resilient. So talk us through how the economy has managed to be so resilient and how you think this resilience is going to serve you well in terms of creating a competitive economy.
Thank you for this question, very important question. 3, 4 factors to resume that. Great vision. We have strategy designed by our king, 20 years, and we're working on these strategies. Second is stability is a key pillar of this strategy. That means we do it the hard way. We choose always the hard way. We maintained an inflation rate below 2% during 20 years. During the explosion of the prices after the Ukraine war, we maintained inflation below 7%, 6.6%. So we're doing it the hard way. Third is that we choose our battles, and we choose our strategy, targeted strategy, in manufacturing, in tourism, in energy. And we didn't have any other choice than to make the energy transition pathway, because we don't have hydrocarbon available in Morocco. So results of that is having an economy that has margin to absorb some crisis, because you're doing it the hard way. The result of that is that you continue to make progress, even if you have a severe drought, earthquake, etc. The result of that is that after 15 or 18 years of deploying this strategy, we're observing a Moroccan miracle. That means today we can proudly say that 85% of our exports, 85% of our export, of the value of our export, are manufactured products. You can see developed countries, or industrial countries, as we call them, that cannot reach this level. We can proudly say that we have the best and the most competitive platform in producing cars in the world. It means now, with the figures, transformation costs are similar to countries like India or China. So now we are in a path where we build this competitiveness based on cost and on quality, and we are trying to reach the next level to move from a low-cost country to a best-cost country. This is reached, and the next level is to move from a best-cost country to a best-solution country.
Quick question for you, Minister, just as a follow-up. It is the year of the culture for Morocco, Qatar, and obviously we are here in Qatar. So just an answer on how you think this is going to serve your both respective economies.
Well, first of all, Qatar is not a closest friend, but a brother of Morocco. And during the earthquake, Qatari teams were first to support us, and thank you for that. We're very proud of that, and we are very happy. And thank you for your solidarity, because most of you were in Morocco 3 weeks after the earthquake to support us during this period. And we are very proud to have been able to host you after this trauma. And we are proud also that the 2024 is the year of Qatar and Morocco cultural to celebrate common culture together in Marrakesh, and you are all invited to be there. It's going to be a beautiful event.
Well, when we think about creating competitive economies, there's often a wedge between the perception internally and externally. And you tweeted not so long ago just that in the last month, there's been a lot of foreigner interest in Turkey. Reserves have increased by $30 billion. This is a tweet that you put up. Do you feel like there's a difference in understanding in what you're trying to achieve between how the external community view it versus internally? Because internally, there's still a fear about where inflation is headed. Inflation expectations, if you look at some of the recent surveys, are still quite high.
Well, it depends. It depends who. I mean, let's put it this way: when we refer to external actors, usually they are sophisticated global financial institutions or think tanks, etc. If you're talking about domestic population, it's easy to extrapolate the trends of recent past into the future. So when you look at current inflation, for example, it refers to past 12 months. But over the past several months, we've done a major course correction in monetary policy. And now we have a monetary policy stance that is sufficiently tight enough to anchor inflation expectations. But that's not reflected in the past numbers. So when you ask local economists in terms of their inflation expectations for the next 12 months, they already see it, going down from around 70% to mid-30s. It's somewhat higher than what we are targeting, but it takes time to have the convergence between your targets based on your program versus the expectations. The best way is to deliver. And this summer, there's going to be very strong delivery. Last year, we focused on fiscal consolidation. We delivered front-loaded fiscal adjustment. Debt to GDP ratio is only 29.5%. Structural reforms, we're not pushing through aggressively. Now it's time to deliver on disinflation front. And once the numbers begin to emerge, meaning once the year-on-year inflation begins to come down, I'm absolutely convinced that domestic population and local actors in terms of business people and others will come around. It takes time.
Yeah.
There's a bit of inertia in services. It's understandable. But delivery is going to be key.
Will this normalization of the Turkish economy mean that you will start easing some of the restrictions on capital mobility?
We've eased those significantly, the so-called macroprudential measures. We've already unwinded most of them. We're simplifying. Well-functioning markets is key to competitiveness and productivity. And that's what exactly we're doing. This is a sizable economy. Remember, it's over $1.1 trillion, and it's still growing pretty fast. The 20-year average real GDP growth has been close to 5.5%. So it's a sizable economy. It's growing. We've had a period where policy choices created some issues, challenges. That's largely behind us. So we are going through a sustained period of simplification and unwinding some of those macro so-called prudential measures.
Minister, I'd like to turn to trade and ask you how you see the outlook for trade, particularly in Southeast Asia, proximity to China, and also the fact that you have a very close trading relationship with China, but recently you've started to strengthen your relationship with the US as well. Do you feel like you're caught between the crosswinds of this Cold War, so to speak, between the US and China?
Well, we have maintained the policy as initiated by President Marcos in his State of the Nation address last year, that we are friends to all, enemy to none. And in that sense, we are balancing our relationship with all the partners that we have. With the US, we have intensified our engagement. Early this year, there was a trilateral meeting between the US, Japan, and the Philippines, where we talked about economic matters. And this May 21st, we're going to hold the Indo-Pacific Economic Forum in Manila with in partnership with the US. So we're pursuing that. And we have concluded the agreement of the US-led Indo-Pacific Economic Forum, the three pillars of supply chain, clean energy, and fair economy. So that's our relationship with the US. With China, we continue to see China as our largest and foremost trading partner. It's number one. US just the third in terms of trade volume. And we continue that. And our engagement with China is through the RCEP, the Regional Comprehensive Economic Partnership, which we are implementing with full commitment. And also the ASEAN-China FTA.
Yeah.
With the EU, we hope to broaden our relationship with the start of the negotiation for a free trade agreement between the Philippines and the EU. So we are balancing, our relationship with these three major blocs, plus Japan, of course, also a major partner, and hope to be able to grow our economy on the basis of growing trade partnership with these trading blocs.
Well, Minister, I could put the same question to you, because Morocco is the only African country with a free trade agreement with both the US and the EU recently.
And Turkey.
African. That's why I said African. Attention to
we have
detail.
a free trade
We have a
agreement.
free trade agreement.
Oh, with Turkey,
bilateral.
yeah. And Turkey. But you've also announced some Chinese industrial investments recently as well. So you've got these three competing superpowers, you know, the US economic blocs, US, EU, and China. How do you navigate the relationship with the three in terms of, you know, your stated objective of doubling your GDP by 2035? How does it contribute?
So the idea is clear and simple. We have three objectives, three main objectives. Create jobs, create sustainable jobs, and create good jobs. So it's all about jobs. We are a country in demographic transitions with a bunch of young people coming everywhere, more talented every year, that need to have a better future. And this is our job. And we will take every single opportunity to make it happen. Based on that, we try to read the landscape. The landscape is clear. We're having blocks, 3, 4, 5, 10, 12, whatever, competing against each other or complementing each other, sometimes having, in a VUCA word, you know, with complexity, uncertainty, ambiguity, and it's changing every time, changing the rules. And we try to navigate based on this priority. First of all, I see my customers. My customers are mainly in Europe. So these are my main trading partner, and I try to comply with what it takes to be able to sell my products there, to be clear. Second, I need investments. Investments are coming from everywhere in the world, from Turkey, from Europe, from the US, and now from China. And to see this investment and this product that we will produce, will they comply with some regulations, mainly US regulation, foreign entity of concern, or whatever it takes, or IRA, or other regulations that are coming in Europe, etc. So we navigate based on what we read in the accessibility of the products we were trying to develop in Morocco so that we can be able to create jobs. So it's easy. It's complex every day because we have this uncertainty and this ambiguity in the rules that are changing every time. But we're doing our best. And at the end of the day, there are most of all private investments. So we need to convince private investors to take the risk based on this uncertainty.
Well, that is exactly how much time we have for this panel. Your Excellencies, thank you so much for keeping to time and answering all of my questions. That was wonderful. Thank you.
Thank you, Joumanna.
Thank you.